Hey everybody, welcome to Froggy Stonks. Nothing I say is financial advice, entertainment purposes only, not a financial advisor. Want to talk today about my thesis, what I'm doing in this absolutely horrible, terrible, just pathetic market. This economy's in the dumpster, the market's in the dumpster, and as of right now, there is no end in sight. I don't care what the news says, I don't care what the White House says. They have lied for the past 6 months on inflation. They have lied about the reverse repos. Pack of chicken, a 2-pack of chicken costs $7 now. A 12-pack of eggs is like $3.49 and gas is $5. They've lied to us the entire time. But this is where your opportunity comes in to come out of this like an absolute rock star. I want you guys to see something, right? Let's look at the indexes, the major indexes for the past year, right? Okay, we'll go to the 5-year just so you can see the graph properly. But check this out. Right here on Feb 7th, 2020, which was about the peak of the market before the pandemic, right? Right in this area. We had the pandemic dip. Then we had the mega bull market because of all the free money getting pumped in the economy. And now we're coming back down. And we're coming back down to the levels that I called. The Dow to 30,000, which is the pre-pandemic high. We're coming back on the IWM. We come back down to the levels of 166, 165. Had a little bounce, pre-pandemic high. And the SPY is now tracking that way. The SPY is late to the game. Still coming down to the pre-pandemic high. I believe down to 330, right? That's what I believe. Now, have we had the true market crash yet? I personally don't believe so. I think we're probably going to dip below these struggling lines. Each index is kind of tracking off on its own, but we're all seeing the same pattern. It's all coming down the same way. And more hedge funds are going out of business every day. We just had another one collapse. Not Tiger Global, but it was Tiger Praetorian or something like that was going out of business. Melvin's winding down, and there's more to come. There's definitely more to come. They're over leveraged 10, 12 times to the max. They're losing all their money. We got tons of money outflowing to China still that shouldn't be happening. We're sending billions of dollars to Ukraine. We're paying off the rest of the world for things that we should be doing here in America to help families that are struggling at the grocery stores, which, of course, today I went to the grocery store and I'm standing in a line watching the single mother cry because she can't afford freaking groceries, even with the benefits she's getting from the state. She's got a couple kids and works night job. So, we helped her out. We got her groceries. But it absolutely just enraged me. And then I thought, well, maybe we should turn this into some type of lesson for people, especially on the channel and on Twitter and stuff, to know what's about to happen. Because I've already lived through one pretty serious market crash. That was 2008. I was in Iraq at the time, and I had never traded a stock in my life. And there was a contractor who worked with us overseas who said, hey man, come check this out. We're doing the stock thing. We're getting into these stocks. And I made 10 grand off it. I made a little play on Visteon, which was a motor company part during the dip, and made 10 grand. If I would have been smarter, I would have held my Ford stock that I bought at $1.33. But I was a young kid coming home from Iraq, and the strip club was way more important to me. So there's that story. But we had another dip, the pandemic dip, which really wasn't a market crash in my mind. It was more of a forced market crash because they forced everything closed. Now, the problem is they forced it closed for so long that the government had to put out hundreds of billions, if not trillions of dollars in stimulus, which then was eaten up by the market. They came out, they advertised, here's your free trading apps, here's your free stocks, gamification, everybody's making mad money, and the stock market pumped like nobody's business through this period from, we'll say 11.4 to 11.04, right? We all saw it. We were all part of it. Here's the deal. Right now, we're hitting these pre-pandemic highs. The economy is still having supply chain issues. We still have war going on in Ukraine. And China is still speaking on COVID. It's not a big deal to Americans anymore for the most part. I think a lot of probably other people in other countries too, we've kind of realized like, hey, if you stay active and you stay healthy instead of hiding in your home and all that. It's not as bad as everybody said it is, right? Whatever you believe about that, whatever. I don't care. I don't care about that. But here we are. We're bouncing pre-pandemic highs. Pre-pandemic highs was a hard ceiling for indexes like the IWM, the Dow, the SPY, and all that, right? Look at that. Hard ceiling. I mean, we came up, hit, boom, done. Then we bounced around there for a little bit, and then the SPY took off. Now, all this took off because these market makers and hedge funds were absolutely loading the boat, over leveraging everything they could, trying to make as much money off of retail, the $1 trillion that retail put in, as quickly as they could because they were all so over leveraged. They didn't know what to do. They got greedy, they got stuck, and now they're blowing up, going out of business. Just like Bank of America just increased their short position on AMC. Bank of America should be shut down immediately. The federal government should come in and go, you guys are out of your freaking mind. Stop. We're stopping shorting on AMC, just like they stopped the buying on AMC. So this economy can recover. We need to unwind all these over leveraged funds. So I think there's more downside to the SPY. I think it's upcoming. I think we're going to have bad economic numbers. We're going to have another 75 basis point price raise, interest rate raise next month. They've already said that. That hasn't been priced in yet. I think we're going to see another drop in the SPY. I think the IWM, if it does drop a little bit more, it'll probably only drop around to this 150 level maximum, in my opinion. But I think it's going to try to bounce sideways. These other indexes have kind of already tracked the proper way, and I think it's because they're so actively holding or involved with the meme stocks. They're pretty heavily loaded on meme stocks per average weighted average. So what I'm going to do, this is it. This is what I think my best opportunity is here. For the next 6 months, I'm going to continue to just buy long value plays, like good, deep value long plays, right? There's companies right now that are kicking hard on this EV thing, like Ford, right? Ford is back down from all-time highs, hitting around this base level. I'm going to snatch a little bit of that up slowly through the rest of this market crash, right? That's where we're sitting right now. $11.23, and they are selling out left and right of their EVs. I think we are going to turn oil production back on after midterms, but I do not think they're going to cancel these EV programs because they know the detriment that is going to cause on swing cycles and next elections. It's time to find balance between EVs and fossil fuel production so we can transition over the next 30 years appropriately instead of destroying the economy every time we have Democrats come in to push absolute nonstop green energy, solar energy, EV stuff. There has to be a balance where we have money and economy coming from the oil and fossil fuel industry, and we can transition over to the EV industry. But the problem is a lot of energy plants still run off of fossil fuel. So we need to transition to more nuclear, and we need to keep our fossil fuels in clean production. America is the cleanest producing fuel producer in the world. We need to keep producing in America to keep the economy going, to transition to this renewable energy plan that I agree with if we do it right. So yeah, there we go. Look at that. Ford back down $11.23. Might dip a little more. You might see it coming down to this level. I'm not predicting it or 100% sure, but if you see it around $9, anywhere 11 to 9, I'm going to start snagging up just a couple shares here and there. Because when this economy starts recovering in the next year after midterms and we get into these next election cycles, you're going to see a switch. You're going to see the House and the Senate flip red. You're going to see Speaker of the House change, and you're going to see a switch in our economic footprint when we go back to more conservative-based, energy-producing, job-working, less stipends, less stimulus money, put people back to work type of environment. And that's going to help the economy. Because if anything helps the economy, it is American citizens going to work, producing, getting that GDP up, taking their money and spending it out in their local economies, which is going to help put inflation down. And with that, our interest rates will come down and our housing market will start to recover. The housing market has not even seen its dip yet. It's coming. I'm telling you, it's coming. If you just bought a house, do not try to panic sell because you see housing crashing. What you want to do is hold it, pay it off as quickly as you can, up your payments on it, make the bi-monthly payments so that you make that extra payment through the year, cuts a lot of interest rate off. And then when everything recovers, refinance to get that lower interest rate when we get back down to 2-3%. Yeah, so Ford, that's one of them right there. Even Tesla. Tesla right now is in the dumps. Tesla's at 650, hitting that line. Look at that line. Let's see, where was the pandemic hit at? Right around this area. This is where Tesla started dropping off. We're hitting that bottom support again. It's bouncing around there, and they're talking about a 3-to-1 stock split. If you can grab a share of Tesla coming up here, imagine this. They do the 3-to-1 stock split, then they come out and announce that Skylink is going to go public. And Skylink is going to make more money than anybody's ever seen. Global high-speed satellite internet. And it's been proven to work. They shipped it over to Ukraine. I heard people up in the mountains in Montana using it. It's a really great product. I'll probably have it when I get my house built out here, whenever that happens. But yeah, I'm gonna grab a little bit of Tesla. I'm gonna grab a share. I'm gonna wait for the split, hold on to it. Then when they announce SpaceX and Skylink going public, Tesla's revenues are gonna soar. Not that they're all the same part of the same company, but it's Elon Musk. I mean, that's what's going on. Elon Musk runs all three of them. He's gonna have more money than anybody ever imagined in the world, and it's not gonna stop there. And if at any point in time he decides to make it a conglomerate, your Tesla stock's going to be insane, crazy, worth a ton of money. So I'll grab a share of Tesla. There's tons of companies like this, guys. Companies that make real revenues, that are stable even through economic downturns, that are going to recover really hard. And another one, our favorite, AMC Theaters. Check this, you guys. This is crazy, man. Look at where AMC used to rock out at years ago, when it was just a theater company and didn't really have the brand recognition that it has today. AMC has more brand recognition than any other theater on the planet because of retail trending it nonstop. We used to be, before the float was diluted, we used to be around $33 a share. And then all of a sudden, boom, heavy shorting, which Adam Aaron announced all the way through 2019. They were crushing the company. The pandemic hit, and they absolutely destroyed AMC Theaters, which we saved down at $1.90. And we saw the 72 run. Now we're coming back to this base level right here, this blue line, which trends historically with prices in the past. But here, this is where we're sitting today. Don't worry about this yellow line. We're sitting here. We're sitting around, 1230 now. It's still a good fundamental buy, and I'll tell you why. We're getting ready to be positive in Q2. The movie theater has been completely revitalized. The cinema has been revitalized. We've had major titles dropping nonstop. Actors are excited. They're making money. Production studios are making a killing. Spider-Man went over $1.5 billion. Top Gun's crushing it. Multiverse of Madness almost hit $1 billion. Top Gun will definitely hit $1 billion. Jurassic Park is crushing it. We got Thor, Love, and Thunder coming up. The revenues are coming in. AMC has reduced debt on their balance sheet by reconstituting their loans and their debt. They've paid off some deferred rent payments last quarter, which helped considerably reduce debt this quarter. And we've had 3 major titles this quarter from April 1st through June 30th. We've had Multiverse of Madness, Top Gun. We had Bad Guys, which made a little bit of money. And Jurassic Park, which is making a killing right now. It's absolutely making a killing. Lightyear's coming out, making good numbers too. They're talking $150 million by June 30th. So that's a banger of a quarter for AMC. That's without counting revenues on popcorn and revenues for all the popcorn containers. You can see my shelf over there. I've got 3 of them. Uh-oh, froze my camera. I paid over, I'd say $24 a pop for those things. And I'm absolutely happy with that purchase. I love them. It's a great collectible side set in my apartment, man. I'm absolutely digging it. So AMC's got that going, but not to mention, after Q2, between Q2 and 2023, AMC is going to have the AMC branded credit card and AMC branded retail popcorn sold in grocery stores. Popcorn makes almost a 75-80% profit margin. And by my calculations of all the grocery stores in the U.S., not counting e-commerce, AMC could bring in $300 million easily annually on their popcorn sales. The credit card is brilliant The branded credit cards, on average, bring in $185 per active account on an active branded credit card from a company. AMC has 125 million people coming to their theaters annually. So if even 5% of that, which is 6 million some people, decided to get the credit card and stay active for a year, that's over $1.15 billion annually for AMC on credit card revenue. So we have two new major revenue streams that are going to come in and put AMC revenues at all-time highs. They're going to be able to pay off debt. We're going to keep doing this. And then we have the potential for the massive squeeze that's coming up. When this market starts to recover, you're going to see all these other hedge funds right before, you're going to see them absolutely collapse. And they're going to have to start getting margin called, and they're going to have to start putting money back into the stock. And also, if we move to the Russell 1000, that's a major bonus for AMC for the rebalancing of the index funds. So I'm personally predicting by the end of the year, easily, AMC should be running around $30 again with these new revenue streams in line if we stay profitable for Q2, 3, and 4, which Adam Aaron basically said, yes, our revenues are going to improve quarter over quarter this year. So absolutely excited with that. So there we go. I got Tesla. I'm going to get some Ford. I've got my AMC. I've also got my Hycroft mine. Gold and silver is going to go up with the downturn in the economy. It's silver demand is going through the roof for these new solar initiatives. Silver goes into everything. And Diane Garrett's a phenomenal CEO, so there's another value play. $1.40 for Hycroft mine. I bought a bunch of shares. I'm just going to let it sit. I'm not going to worry about that one. I know when they become full-scale commercialized operations in 2023, they're going to be producing a lot of silver and gold, which is going to go increasingly exponentially demanded with the new semiconductor businesses like Intel are opening in Ohio. So there's another value play. And yeah, I mean, this is the key, you guys. I know a lot of people have gotten discouraged and depressed over the past 8 months because some of these stocks have done nothing but go down. AMC has done nothing but go down, except for the big Melvin spike, which I call the Melvin spike because I think Melvin covered IWM shorts, which caused AMC to run to 34, and the fact that Citadel and them came back in and bought all their shorts back down. So if we see right here, AMC ran to $34 on a one-day period, then you know that we can hit $34 on a 2-week, 3-week period. So it's coming, you guys. The value plays are there. Don't get discouraged. Like Mark Cahotas says, never let go of the rope. This is the time now through the next 6 months where we're going to see the hardest parts of the market. But in that, it doesn't matter if your portfolio is red. If you continue to build your position in good companies that have good revenues coming in, that are known for surviving bad economic downturns. AMC's a 101-year-old company, and Ford always recovers better than any other company I've ever seen through these bad economic downturns, man, because they're a more fiscally, financially responsible company. So I'm going to get in on some Ford next week. My main plays are AMC, GME, and Hycroft, and I think I've loaded to the point. Unless I see a dip on AMC below $10 again, I probably won't be buying much more of it. Unless I see a dip on GME below 100 again, I probably won't buy much more of it because I'm happy with where I'm at. I'm positive on my position finally. I've averaged down the entire time. And Hycroft, I'm just going to sit there and let it wait because I think Hycroft is a $5 to $10 company in the future. That's going to be a good profit-taking company at the peak to turn back around and use to put into other plays when the economy starts recovering next year. And yeah, so this too, we're at the bottom or close to the bottom. I'm loading my position because I know how these market crashes work. I know how midterms work and the redistribution of political power in the United States during election cycles. It's coming. This is your opportunity to get into good plays, to stop chasing all these other random meme stocks like Redbox and all this other crap, to get into these good plays, super cheap, and be patient to ride these suckers back up in a booming economy in the next 4 to 5 years that I think is going to come with the redistribution of political power back to center to the right. And then we'll get all into that later. And I don't care if you're left or right. I really don't care. The conservatives had a much better economy under Trump that I've ever seen in my entire life. I don't personally like Trump's attitude or any of that. I voted for Ben Carson. I thought he was the more stable candidate. And I personally would have loved to see Tulsi Gabbard as a Democrat as president. So just my little blip there, so you don't think I'm just left or right one-sided. So yeah, that's my plan. I'm going to play the economic downturn. I'm going to sacrifice now to keep buying good value plays through the rest of this crash. And then when we start recovering, I'm going to come back on here and do a video, and I'm going to ask all of you what good value plays that you found and got into and how you made a fortune on this market crash on the way back up. And then when we do go back up, we'll all start talking about looking for the next top. That's how we do it. I'm also in this. I am going to be selling puts. When this market starts to recover, I'm going to be selling puts on stocks like Ford all the way back up to the top. That is going to be a nice revenue stream for me, selling puts on companies that have good stability and growth through the rest of the market recovery. So yeah, that's it, guys. I just wanted to do kind of a little motivational pep video this weekend because markets close Monday for Juneteenth, so we got a 3-day weekend. But let's start thinking and planning months ahead of time. Let's make this money. Let's stop running and chasing these insane meme stocks. Most of us are in AMC, GME, or these other plays, but these wild volatility stocks they keep throwing in front of us on Twitter, they're doing it to do liquidity pumps, to get money to meet their margin requirements, and it's time to become the better investor. We've all learned enough this year. This has been one of the best educations I've ever had personally in my life. So I'm going to start playing my Ford, my Tesla. I'm going to keep my AMC and GME and my Hycroft. And then when I start seeing a market recovery, I'm going to start using some of those shares I have, if it's not squeezing out, to sell puts. Well, even if it does squeeze, I'm going to be selling weekly or monthly puts on these stocks on the market recovery to make some side cash to go do some fun things, man. And personally, right now, I have puts on the SPY. I do believe, like I said, there's more downside. I think the SPY is going to come back down and test 330, and we're going to see what happens. And if I make money on that, that's what I can use to start putting into these value plays. If you make money on a very volatile, risky play and you make it big, the worst thing you can do is jump back into another risky, volatile play, man. Get into something good and safe that you know has good revenues, that has good sales, and a good brand name. And that's my 4 things. I put this on Twitter the other day, how I do my DD now. I don't do my DD based on market mechanic classical charting because we've all seen how that fails. Every time we think there's like a bullish outbreak, we get a bear trap and people get crushed when they think they're buying the dip. So let me find my tweet real quick. Where do you go? Tweet too much. Here we go. How I do DD. 1, I check the trend level on the rumors. When you hear a rumor or news about a stock, I look and see how well it's trending. If it's trending exponentially higher and higher, then I'm like, okay, this is interesting. What's going on? Why is everybody talking about it? If it's trending, you know people are in on the play. 2, who are the institutional investors? This is how I found Revlon. I looked at Revlon. It started trending. I looked in. I said, who's the institutional investors? And lo and behold, it's Citadel, Susquehanna, Virtue, and Simplex Trading. All the people who were shorting AMC, who have control over the markets. And I said, wow, they're long on this play. Why are they long in a bankruptcy play? Which gave me the idea during Froggy Style Show. I said, I bet you someone's coming in to buy out Revlon. Who wants to place bets? My pick was Amazon. I was wrong on the company, but I was right on the thesis because now Reliance is talking about buying out Revlon, which caused the 135% spike in 2 days, which came down back to 100 by market close yesterday, which isn't surprising. People take their money on the market Friday. I'm hoping to see it pop again Monday. I'm not telling you to get into it because it's already ran way too high. I have a stop loss set, so I'm going to cash out no matter what because I got in early. So yeah, who's the institutions? If you see Citadel, Susk, and all these big guys are long on a play that seems like it's a bad play, then you got to ask yourself the question, why would they be doing this if it's a bad play? 2, company assets versus debt. Check your company. How much debt do they have and how many assets do they have? Revlon had 2.3 billion in assets, 3.5 billion in debt. And I said, this is a perfect company for a buyout, because if they buy out the company, they get all those assets, which they can turn, flip, and go to sale with. And they don't have to deal with that debt too much, because like Reliance is a $2,600 a share stock. So they can handle that and flip those assets and double their money. That's what you got to check, debt versus assets. Company brand recognition. This is so important. Revlon, AMC, Ford, brands that have been around for decades. That's why I looked at Revlon. I said, this seems familiar. A brand I've heard since the day I was born. Revlon. For years, Revlon's been around, since the 1900s. It's crazy. Ford, been around since the 1900s. Freaking AMC Theaters, been around since that time frame. These companies are old, have survived, and continue to flow with the market. So that's why I checked out Revlon. Debt versus assets, it trended in the rumors. The institutional investors were there that I knew weren't going to let this thing go down too much, so nobody was going to get hurt. And then boom, brand recognition. Use these 4 things to theorize what is about to happen in the market. Because if you start thinking like they think, you're going to catch them in their game before they do it. Exactly. Cindy Crawford ads from way back. Revlon, everybody knows that. They're not going to let Revlon go bankrupt and fly off as dust into the wind. Somebody's going to snatch that shit up and use that brand recognition to sell to the general public again. AMC has the largest brand recognition for any theater in the world now. They're never going to go out of business now. We've trended AMC so much that everybody wants to be part of that trend, of that social media experience, which is AMC. So that's how I do it, guys. Get ready to pick your plays. Be patient through this market dip. Build your positions slowly and safely, and don't worry about your P&L while we're still going through the dip, because nobody really knows where it's going to end. But when it does recover, you're going to be in a delicious position as long as you are mentally prepared to continuously and safely and slowly and controlled buy through this dip for the ride back up. And you are going to be not only happy, but you're going to look like one of the best investors of a generation. My biggest mistake in 2008 was chasing plays when the market was crashed. I should have continuously bought into value companies and held until the recovery, and I would have been a multimillionaire straight out of the army, which honestly probably wouldn't have been a good thing for me because I would have blown my lifestyle up. Now I'm responsible enough as an adult to handle that kind of money. So yeah, that's it, man. That's all I wanted to shoot out to you guys. A couple comments. Ball busting Bucks, 100% agree. Paul Jung, good morning, Spence. Good morning, man. Thumbs up from Steve. Froggy Stonks from Gully Go to Glock. And Delayed Noise, I remember Cindy Crawford. Thanks for coming in, y'all. I appreciate the comments. Think about your value plays. I'm going to really discourage chasing any more crazy, insane, volatile meme stocks from this point forward, because I'm not going to miss out on this run. AMC is no longer a meme stock. It is a value play, a deep value play with incredible brand name and revenues coming in. GameStop has been revitalized. That is a brand name that is trending. I'm in that long, especially with the stock split dividend coming up. Tesla, Ford, those types of companies. I'm sticking with Revlon in the position I have because I think it's going to recover. Highcroft Mine. That's what I'm doing. You guys make your own decisions, find your own stocks. If you find anything good, come back in and throw it in the chat and we'll talk about it, man. But for the main part, AMC to the freaking moon, baby. We're going for a ride. I can't wait. I can't wait. I can't wait. Everybody deserves what is coming in Q2. Woo! Y'all have a great weekend. I'm glad I found your channel. Shermeen Washington. Yeah. Shermeen. I'm sorry if I'm saying your name wrong. I'm glad you found it too. Thank you for coming, man. Please like and subscribe. This channel will always be free. I will never charge anything. I will never do a super chat. I'm never going to DM you saying I've got a Discord. So if anybody ever says they're me asking for money, tell them to go F themselves. It's not me. I want you to put your money into your investments. Great info, thoughts you give. Thanks. Thank you. Thanks for coming in and the kind words. I'm going to sign off and go play with my depressed, droopy spoiled dog over here. So you guys have a great weekend, man.